out of water, but this one's carbonated.
Oh, there you go. Oh.
Tastes very flavorful.
Okay, we'll try to do this.
Call it water.
Yeah.
It's still 90%
It's
plus
it's
water.
mostly water.
It's mostly water, yeah.
It's flavored water.
90 plus percent water.
Exactly.
There we go.
Okay, so all of that, I'm just going to check that out.
Hopefully my hair doesn't get all over this thing.
Whip it out.
So whip it, yeah.
Go full rock star.
Mic check.
Testing.
Might have put the mute on the inside. Power's on. Oh, that's weird.
Uh-oh. Do you want me to hold that? Yeah. We need a stage in our office, Kevin. Testing. Testing again. Whoa.
So I think we do have a feedback challenge here.
Okay.
So let's put
Yeah,
this
on the other side.
on the other side, and,
Cool.
and pretty high up.
Okay.
So try to get almost like a collarbone.
Okay.
On the other side.
I'll throw that out, I promise. Like there? Too high?
I think it says pointing downward is the only problem.
Oh, okay.
The clip's on the wrong side.
Yeah.
So, yeah, just try that
Can
side.
I just switch the mic?
If you're able to pop it out, yeah. Whatever you need to do.
There we go.
There you go. Now it's away from your hair.
Yeah, sorry.
There we go.
There we go.
That already sounds a little bit better.
Okay.
And I'll tweak it live to try to prevent the feedback.
Okay. Should start singing.
Mic,
Do it.
mic check 1 2 1 2.
Cool.
That was like a few minutes, so we all set to go.
Okay, awesome. Thank you. I guess I don't need this. Say it again. What's working? Oh, wonderful. Should I put this in my pocket rather than clipping it? That's like kind of weird, huh? Kev, does this look weird? It's okay? My little guy? All right. Cool.
So gamers is going to show up in a little bit and make everybody just perpetuate the industry.
But then, maybe we'll get fired.
Honest to God, though, we can ask what's the new success? Like Romaine? Like Rainer? Is successful? Like what is the success that's being measured right now?
But it's being managed.
Just jump on calls and talk about like
Smart
oh,
clone.
we're disappointed, and can you do this random thing that's happening in 2 weeks? Cool, see you next time.
I know. Well, that's what, like, the program is just too big, right? It's too many people.
Which is an out we were hovering at before we laid off.
But what, before what?
They laid off everybody going into Christmas last year.
Yeah.
Like 80 people from like product marketing was like axed. It was not, we're getting axes left and right as a company. Then Orlando in February comes around. We all meet. We're just like, oh, God, this sucks. What?
Okay. Okay.
Sounds good.
Cool, man.
I guess.
Cool, man.
Also, we were hacked by North Korea. Crazy. I'm surprised they hadn't had me killed for knowing that information. They hit it my back. Watch out. Shouldn't say that.
Oh, I hate like the last 2 minutes before going on.
Social lube.
Totally. Social lube. I know. Maybe I should have like chugged one of these. I was like, no, go with caffeine. Go with uppers, not downers.
Pick a poison.
Yeah, I love this setup though.
It's pretty sweet.
It's really nice. Cool stuff. One of two, yeah. I'll try to keep you entertained. Please no.
Can you imagine? Oh
Please
my
no.
Say something funny.
I know. Stairway to heaven.
Alright, cool. I guess this is gonna be fun.
No, it's awesome. That's awesome. Yeah, just keep it simple. Yeah, I gotta tell you more detail, but it's going.
Okay, so when
Where-
you're done, I'll just split with you and
Okay.
I'll just like walk you to your car.
Okay. Oh, thanks. Yeah, we can just like debrief. I gotta tell Paul. I feel really bad for just leaving right afterwards. I'm just worried.
It happens all the time. You'd be surprised.
No, really?
I've had people literally driven down to LA, had some random thing, like they committed to it, and then talk for 20 minutes and split right back to LA. I've been here for it.
Damn.
We should probably start somewhere. What's up, girly? How you
How you
doing?
doing?
Amazing.
How are you? How are you? I was deep in
You're good.
conversation.
Have you met Anna?
Yeah, we met.
I didn't-
Hi.
Okay, perfect.
I knew you looked familiar. I'm gonna give you a hug.
Okay.
I knew you looked familiar. Like when I met you, I didn't realize you were. I literally just tweeted you like yesterday.
Oh yeah. Thank you.
Yeah, I did. It was like, come see us. Let's see us at Edge. I'm really excited for this.
Okay. Well, I'll try to keep you guys entertained.
I'm sure you won't have to try too hard. Cheapest decks. That's
So
pretty
sorry.
cool.
Do you know what that is?
Yeah, of course.
Yes. Yes. Yes.
Yeah, we have. Yeah.
Okay, we're set.
Cool.
Like it.
Okay.
Started.
Okay. I'm gonna
Testing,
leave.
testing.
It's okay.
1,
I'm gonna
2.
leave this here. Hopefully that's like safe there. Is that? Wait, maybe not. Kev, I'm just gonna leave all my shit here.
Hello, everybody.
Testing. If everyone wants to start making their way over towards the chairs, we're going to be beginning in about 2 minutes.
Okay. Are you new here or
You've just been in the background or
If everyone wants to head over there. Yeah.
Kev, can I just like chug a sip of that really fast?
On? It's on.
No. Oh, okay.
Point
Sorry, I
coming
didn't
over
want
here.
to. Okay. That is sick. I love this. We need
how
a
could you
studio.
not?
We need a studio. Cool. Thank you. I just needed like my mouth is all dry from the teeth. Little parched.
What the whiffle?
With the little.
Gotta knock the trail dust off the gullet.
Where do you need me?
This mic doesn't need to be.
Hey, Anna. Really good to meet you.
It's funny you guys were talking about Polymarket. Sorry. I met Shane Copeland last week in New York City.
Oh, nice. That's really cool.
Interesting team.
Yeah. I would really like to stay. I have to get back. My kid is sick, so I'm like running here, talking, and then like texting her, like make sure she's alive, and then I'm gonna run home.
Well, you can
Okay, hello everybody. Everyone hearing me loud and clear?
Yeah, right.
All right.
Thank you. Thanks.
Give people a few seconds to mosey on in. Dim the music. Okay, welcome everyone to the October Bitcoin Open Blockchain. Who was able to make it to the party last month? Yeah, cool. You guys have a good time. Should we have more of those? More happy hours? The holidays are coming in hot, so I'm guessing we might have something in the December time frame. I think right before COVID, we had a big one in January. It's kind of like a New Year kickoff party. That was a blast. So welcome everyone to Bitcoin Open Blockchain. A few slides about the organization and group. So we were established way back in 2013. So I guess the meetup is kind of an OG in the space. Kind of approaching now 11 years. I've been involved since about middle of 2013, but I wasn't actually one of the original co-organizers. For anyone that needs Wi-Fi, maybe you're internationally traveling or just want to save on your data, Edge guest, and I like big bits as the password, so go ahead and get connected in case you want to stream, post Instagram photos, tweet about the event. Feel free to do so. As well, we originally started on meetup.com, but we're trying to transition to a more modern platform that doesn't look like it was designed in the 90s and have bugs like it was made with PHP. Sorry for any of you PHP developers out there. So if you did sign up through meetup.com, which I think actually you can't anymore, I think the last post we did asked people to transition over to Luma, but there's the URL to sign up to get notified of future events. And then as well, if you don't want to have to remember the URL, there's a QR code. Feel free to scan it if you haven't already joined. I'll give 5 seconds. No one else needs to. Okay. I want to give props to the people that have helped make this event happen over the course of the past several years. Myself, I'm one of the core organizers. Chris Groshong as well, one of the head organizers. Oh, he's not able to make it today, unfortunately. Same with Madison, not able to make it. Ross is here. Where are you, Ross? Ross in the back over there. Say, thanks, Ross. Thanks for helping us. Daniel as well. Big thanks. Where did Daniel go? Daniel right there. Whoa. There's Daniel. So thanks, Daniel, for all the help. He's also one of our support team members. So when people have problems with crypto and Edge, he's there helping people walk through people through these issues and getting it resolved. So thanks a whole lot, Daniel. Joe's out of town as well, but he's usually here to help out. So thanks to everybody. And if you'd like to join the organizing team, and this is all a volunteer effort, we're just trying to bring people together, learn more about crypto, learn more about different great projects like we're going to hear about today with Krypton and Polymarket. Feel free to scan, send us your email, we'll get in contact. We could always use people to help out, everything from on-site logistics, coordinating with a lot of great companies and speakers. So doing the logistic coordination with them, posting these up and getting the word out to other people about the events that are happening, writing copy to get the events out as well. So feel free to join. We'd love to have other people on board. And then, of course, our sponsors, the money and the effort that makes it happen. Coinstructive, that's Chris Groshong's actual company. He's not able to be here today, but to give them the little pitch, if ever you have any need for kind of investigative services in the crypto and blockchain space, they're your team. So they have helped people that have gotten scammed where they sent their money to maybe a romance scam, or gotten their accounts drained and money just kind of moved on to different blockchains. And he has had success in finding where the money went. He can go into that. He actually gave a great presentation. I think it might be on our YouTube page on how he goes and tracks funds and some of the success he's had. The biggest challenge, obviously, though, is getting law enforcement to act on the evidence that he's been able to find. But coinstructive.com, check out Chris. Brian, you had a comment, question?
Yeah, I was going to say your last QR code sends you to a you need permission.
Oh, I apologize. Let me get that fixed before the next person speaks. Once I get to a computer, I'll get that fixed, and I'll post a QR code at the very end of the meetup as well. So I apologize. Either way, you can always come up to me and give me your email. that works as well. Edge, we're also one of the sponsors. So for those of you that might be new to the meetup and to the space, Paul, CEO and co-founder of Edge, we are a multi-asset trading platform that lets you fully hold and control your own keys and your privacy. We're very privacy focused at the company. We're also open source, so people can see what we're doing in our app and show that we are doing what we say. And also people can just kind of contribute. You don't like a button in the app or how something is phrased or some aspect of the UI, or if you even want to add support for another asset or token, the code's all there. You can actually contribute if you'd like. And as well, Bit Refill. Oh, do we have their banner up today? Or is that the Edge banner? Oh no, I didn't put up the Bit Refill banner. Great company. They're the reason you're eating all the pizza today. Great way to spend Bitcoin. Many people ask me the question like, okay, so I got some Bitcoin, I've got some crypto, but what do I do with it? Is it just a stock, like, or just hold it like gold, it goes up and down in value? But no, you can actually use it in real life. You can use it to buy anything from Visa, MasterCard, gift cards to, I believe, Best Buy, Amazon cards. The name of the company came out of the fact that they offered people refill on mobile top-ups, so top-up mobile phones all around the world. And a bunch of thousands of different merchants around the world you can top up with Bitcoin, Ethereum, stable coins. So check them out, bitrefill.com. They've been a great long-time sponsor of this meetup. And I've known the CEO since about 2015. We've both kind of been in the space for a while. Okay, and with that, we're going to transition over to our first presenter, Anna from Krypton. And Krypton revolutionizes the DeFi space with a new type of decentralized exchange. And for those of you that don't know what decentralized exchanges are, well, I'm not going to tell you. Anna and a lot of what they're working on can give you those details, and also what's new from what we've seen in the DEX space before to what they're building. So let me unplug and get them here on stage.
My name's Anna. No? Are we on? Are we on? Is this thing on?
Is this thing on?
Cool. Wait, I need to. Forgive me. I'm an analog girl at the end of the day. Hey, everybody. How are you? Good. I'm Anna, co-founder of Krypton. I'm hoping to tell you a little bit of a story in 3 parts, hopefully without feedback most of the time. We're building. Do we know what a decentralized exchange is, or should I go there? Okay. I want to tell you a little bit about what we've built, so like the cool technology that we've brought into the world. The second part of this is what we are hoping that it will enable. And the third part of it, which I think is maybe the reason why a lot of people are here, which is what are the cool kind of native solutions that can arise out of that? So products and services that don't exist yet. I think this is possibly the coolest thing about technology, and certainly about financial technology. This will be all about finance and what some might regard as the more boring part of finance, because it's much more focused on things like investment management, execution, trading, transacting, as opposed to kind of the fun, more casino type stuff that we also very much enjoy. It's the guts of finance. So the story of Krypton. I come out of asset management, as does my co-founder, Michael. We're both kind of your TradFi type guys. I thought largely of crypto as an asset class for a very long time. didn't really take a huge interest in the technology really until Krypton. So Michael kind of came to me, he's like, we've known each other since like 2008, so we're very old for the space. He came to me and he was like, I have this idea. And the reason I got so sucked into the idea is because it actually solves a problem that has existed for a very long time. And that is the presence of toxic traders in financial markets. So what Krypton does, we're not just an exchange, we've developed an exchange mechanism that eliminates the profit opportunities of predatory trading. So things like front running, short-term stat arb, where someone has some kind of informational or latency advantage over other players in the market. What the presence of those types of traders does is it increases transaction costs for everybody else. And what we do is we eliminate the opportunity for them to make money off of their technologies, off of their algorithms, off of their co-located servers and whatnot. A lot of people have tried to solve this problem. It's existed for a very long time in TradFi. So you have your Citadels, your Millenniums, not to name names, but we all know them. Basically, they are creating a cost for you that many people aren't even aware exists. But in fact, retail traders in the US are losing about $34 billion a year to this type of predatory behavior. In DeFi, the problem is even worse, simply because of the technologies that have been available to date. The way we solve it, I'm just going to give you the very high level. We can totally dive into details if anyone wants later. But we solve it at the economic level. So rather than what traditional markets have done, which is try to create rules and regulations, and what other systems have done in DeFi through trying to put technology patches onto existing trading mechanisms or exchange mechanisms, we've basically tried to solve it at the incentive level, at the economic level. So does anyone know how an order book works? Kind of, sort of. So on a traditional order book, New York Stock Exchange is an order book, Coinbase is an order book. You have orders coming in, so trade requests coming in, and they're matched on some kind of rule, time, price, priority being the most common one, and then they're executed instantaneously, transactions completed. On Krypton, we use an order book system, except instead of matching and executing orders instantaneously, trades are executed over a period of time. Those are all words, continuous period of time. Those are all words that we know, but nobody has any idea what the fuck I mean when I say that. So I'm going to use an analogy, in fact, that I first tested out here like almost 2 years ago. It's been improved. Say I would like to sell you this can of water. On a normal order book, the way I would sell you this water is to agree with you on a price, $5 for the water. Sorry, I'm getting very wet. We agree on a price, I hand you the water, the can of water, and we're done, right? That's the end of the transaction. On Krypton, we propose that there's another way to sell the water, which is that I pour out the water in this can into a cup, right? That takes place over time. Water flows in a continuous flow over a period of time. Now, the cool thing about that is that you can pour it pretty fast, you can pour it pretty slow, you can stop pouring altogether, but in completing our transaction, we have to agree to some kind of speed for me pouring out the water. So if I'm a Millennium and I have 3 seconds, because it's water, I'm going to use 3 seconds instead of 3 milliseconds, to monetize some kind of an advantage, an informational advantage over you, I need to pour the water really fast. Except I have to tell you about that before I can pour any water, right? In a normal order book, I don't have to tell you anything. As long as I can sell you the water in the next 3 seconds, I win and you lose, right? Because I know that the value of the water is going to drop. So I get my extra $2 or whatever, and you've just lost $2. But if I'm trying to pour out this water to you on Krypton, I have to say, hey, by the way, you're cool if I just dump the water, right? And then you can say, no, I am not. I will only pay you $1 now for that water. So that's kind of the intuition for how it works. And that's how we solve one piece of the predatory trading problem. This method also solves for things like front running. You see that in traditional markets as payment for order flow. You see it in DeFi as MEV. And it's also kind of features into impermanent loss. But impermanent loss is more of a adverse selection thing, which is what I've just explained. I won't go into the details. Nobody cares. I mean, I know you care, but it's a lot of detail. So basically, what we've done is we've created a system that eliminates a profit incentive for the bad guys, so that only people are left in the market are people who are just trying to buy and sell, right? And then market makers who are providing a service to the marketplace by giving you instant liquidity. Which kind of brings me to part 2 of this talk, which is, what does that actually do for anybody? Are we familiar with the idea of tokenization? Kind of, sort of, yeah. So it's a really cool idea, right? Bring assets from outside, like the regular financial system, on chain. It's such a cool idea, but the problem is there's no business case for it, right? Like, who is going to spend, like, at large, right? It's worked for stablecoins really well. There's a business case. It's worked for, some mutual funds, private equity. But en masse, how are you going to bring an entire financial, so I can put this down, on chain if there isn't a real financial incentive, right? This is finance. You need to either make me a lot of money or save me a lot of money, right? And what we're proposing is that Krypton is that financial motivator to bring assets on chain, right? We make transactions cheaper. In fact, our research is showing us, we were sort of hoping this would be the case, but in fact, Krypton is cheaper than any secondary trading venue in traditional markets. That's not something that any of our peers in DeFi can say, but we can. And we hope that what that will do is actually attract anyone who might be interested in tokenizing assets into actually bringing them on chain and trading them on our secondary trading venue in DeFi. So that's kind of part 2. And we're really excited about that because we would like for the world of finance to move on to blockchains and to tokenize. But so far, it hasn't really been possible. It's also helpful to have a financial motivation because change is very slow in finance normally. But then kind of, we were looking at this and we're like, okay, this is really cool. Market makers are protected. Everybody's kind of winning. This is great. Maybe we can even bring, like general asset management, like portfolios, your 401k, maybe that could be on chain, right? But we started thinking about it and we were like, maybe we could do something even bigger than that. Maybe we could take this even a little bit further. In order to explain our idea for that, I will need to ask you now about your familiarity with market making. This is a whole finance education situation here. You're going to know everything about exchanges.
Weren't there just 18 arrests by the DOJ due to market making?
So,
I'm very familiar. That's just one thing I just wanted to say.
Yeah, no, so market making is really interesting as it is today, right? So as I said earlier, what market makers do as a service is they provide instant liquidity. So if you're coming in and you want to buy something, they provide instantaneous counterparty to your trade. So you don't have to wait around for somebody to sell what it is that you're buying, right? Unfortunately, for all of us, on any traditional or existing mechanism, it's an incredibly adversarial service to provide. On Binance and other kind of traditional order books, about 1 out of every 10 traders is toxic. So the market maker is losing 10% of the time to whoever they're providing liquidity to. That's a business loss, right? So they have to charge a spread, but now they have to charge higher spreads because they're losing 1 out of every 10. It's very complicated business to be in. So what do most market makers do? They also have prop desks. A prop desk is a team in your business that runs proprietary trading strategies. Almost every professional market making firm that you've ever heard of has a prop desk, and that's where they make most of their money. So they know how to protect themselves, which means they also know like how the bad guys work. It's sort of like running a security company, but then also being a criminal, right? Like you kind of know how to play both games. Not that market making is a crime, blah, blah, blah.
Like the guy launching shitcoin?
That's another strategy. Yet another strategy that one could employ if one wants to make more money. In general, however, there's a lot to talk about on that side of the world. And in fact, I will say this. I don't know if I should say this. I will say this. We've talked to many of the market making firms in the space because we're like, hey, cool, look, we have this cool new way for you to run your market making services that's much safer for you. And then you get to the part of the conversation where they're like, wait a second, you can't run prop strategies on Krypton, right? Like all of these tricks and shenanigans that people do to make a little bit of extra cash, like it doesn't work. And then that's usually when the conversation stops. But we hold them in our hearts. So it's a very adversarial business to be in. And there's kind of two key risks that a market maker faces. One is this adverse selection risk. It's the risk of being picked off by traders that know a little bit more than you do. We solve that problem. And then the second kind of key thing is what's called inventory risk. So when you're in the market making business, you don't want to actually hold on to, like you don't want long exposure, right? Like you just want to have enough to provide your service and not any more than that, because holding assets is a risk, right? What if the price moves? So now I had to buy, 10,000 Bitcoin to like, whatever your inventory needed to be, and now the price goes down and now you're out, right? So you have your business risks and you have the inventory risk. If you solve the first problem, which is this adverse selection problem, it's the risk of getting picked off by the bad guys, you're only left with inventory risk. And we kind of looked at each other like 4 or 5 months ago, and we were like, well, we had to build all these algorithms around the exchange to help kind of kickstart adoption. So we had to build we have a research team that's building market making algorithms. And we're like, well, what if instead of targeting zero inventory, minimal inventory, we targeted like a positive number? For example, like what if someone had $1 million and they wanted 20% of it in Bitcoin and 30% of it in ETH and whatever else for the remaining 50%? What if we had targets instead of a minimization? And what you get there, because a lot of people are holding inventories, right? Like, do you have a brokerage account or a cold storage wallet or whatever it might be where you just are sitting on a long position of something, right? And like, we kind of like to earn money on our money, right? Like, of course we want capital appreciation, but like, wouldn't it be kind of cool if you could like earn a little bit of yield on that as well? There's plenty of people shilling stuff like that to you all the time. And so we thought, well, wouldn't it be interesting if you could actually build and manage portfolios by providing a service to the marketplace? Now that we've gotten rid of the risk that you could get picked off at any moment by an adversarial trader, an informed trader, what if you could actually get paid to build and manage your portfolio rather than having to pay? So like today, in a normal setting, if I have $1 million and I want to build a portfolio of any combination of assets, I have to pay cost for that, right? I have to transact to build the portfolio. That's a cost. If I'm moving very large numbers, I have to pay a price impact. So then I might need to employ a trading strategy, and there's just cost upon cost upon cost to build and rebalance a portfolio. Most of us are shielded from those costs, both by the financial industry and by DeFi. Nobody likes to disclose how much you're actually paying. They'll give a protocol fee and like a max slippage, but no one's actually reporting to you what your execution was. Like we offered on Twitter like a couple months ago, we'll give you $1,000 if you can show me any retail-facing system that shows you exactly what your total implementation cost was from the asset's micro price, that's an estimate of fair value. Nobody did it. So you don't actually know what your full cost is, right? On Krypton, we're building, and it only exists because Krypton is so protective of market makers. We're building what we're calling an integrated asset manager that kind of exists because of the exchange, where when you're building and managing your portfolio, you can actually get paid to build and rebalance your position rather than having to pay for the favor. This is something that's literally never existed before. It's something that is native to a technology that was built in Web3. And we are hoping to bring it out into the world and to go from adoption of the first iteration, the first generation of technologies, into more kind of new products and services that haven't existed before, that are native to the space. And that's, I think, what we're the most excited about. Obviously, for a lot of people, the idea of like rebalancing and whatever, it's like so boring, and you might just like, oh, just whatever's happening over there, I don't care. I'm gonna play in like the fun part, and that's totally fair. But if we care about adoption and we care about making DeFi a vital part of the global financial system, the boarding stuff is absolutely vital. Similar to how stablecoins can completely change the game for global payments. If anybody's ever sent a wire, it's like a nightmare of fiat. Like, stablecoins, fix it. And in this way, like, we could fix a problem that has existed for a long time, and could help to usher in a new generation of finance. And that's what we're really excited about. That's what we're trying to do. Krypton is kind of the first step of that. We're hoping this is like a 5, 10, 20, 25 year process and evolution. Thank you for letting me come and share it with you. If you would like to try a new type of exchange, please join our testnet. We'll be launching early next year, but we're still on testnet. It's kryptonbeta.com. And please, yes.
Is it user friendly yet? I'm not a technical person. I can't do anything testnet. I stay away from that kind of stuff.
Yeah.
I need like press here for stuff.
Press here.
You know?
So we're still on the technical testnet, so you would have to do a little bit of the onboarding, like you'd have to switch to our network and MetaMask and like, that kind of stuff. If you're comfortable with that, it's super easy. If you're not comfortable with it, like one of us will literally sit on the phone and walk you through it.
Are you on Chainlist? You're talking about having MetaMask.
If you guys can hang tight till the mic gets over to you, so that way
Sorry.
the recording can actually hear your questions. I'll get you one right quick.
I just heard,
Here,
are we on
Jeremy.
Chainlist? No, we're not.
Is it?
I didn't hear the second part, sorry.
No, there wasn't a second.
Oh, okay.
Is it fair to call this a custodial DEX?
It's a non-custodial DEX.
Okay.
So I think that's a really, like the definition of decentralized is really interesting kind of as a subject all by itself. We use a hybrid smart contract, so you would commit tokens to a smart contract, but we never physically hold custody of your assets. It's all smart contract based.
Got it.
Would this allow you to be able to like? I know that you said that prop firms can't run like strategies on top of Krypton, but would this allow like asset managers to allow their customers to have some sort of like automated management for their assets? If they want like stablecoin yield or ETH yield, they don't have to worry about the protocols that they're interacting with. They can kind of just assign this to somebody else. Is that sort of the idea? Or am I off base?
Yeah, so that would be absolutely an ambition. I think the overriding ambition for asset management is automated, transparent, and safe.
Yeah.
So yeah, that's absolutely would be one of the ambitions on there.
Okay. Very cool.
How are you insulated from regulatory concerns?
Nobody's insulated from regulatory concerns. I spend an obscene amount of time thinking about this. The U.S. is very complex to operate in. One of the ways that we're mitigating it is to say, the big question for us was, how do we launch in a way that is not going to alienate us from the financial institutions that we would like to partner with over time to kind of bring into the space, and is not going to get us in trouble with regulators? Because like we're a startup, we don't have a war chest of 10, 20 years of operating costs that we're like comfortable just throwing into lawsuits. So one of the ways that we're dealing with it is our go-to-market strategy is very limited in terms of what we're offering. And that's partly a result of regulatory risk. So we know that, for example, the SEC is comfortable with Bitcoin and ETH as non-securities. So if we offer those tokens, they're not going to come after us. We know that they have a comfort level with stablecoins. So as far as launching goes, when you first see Krypton in the marketplace, it'll be wrapped Bitcoin, wrapped ETH, USDC, and maybe one or two other stablecoins. It's also, that's also kind of a strategic decision in terms of the marketplace, but it's very much driven by regulatory concerns as well.
Use your Ethereum smart contracts?
No, so the architecture is, we're a cross-chain architecture. So we needed two things. Ethereum simply doesn't have the features that we need, which is low cost and speed. And we really believe in the app-specific blockchain narrative. So the way that we've architected this is on an app-specific chain. We're using an Avalanche L1. And then we've built out kind of a cross-chain infrastructure around it, so that you could, this will go out in periods, but that you could access Krypton from any relevant chain that you might be on, without having to deal with bridging and all the headaches that are involved with trying to go cross-chain today. So we abstract away the complexity of the user experience, and we've dealt with some of the cross-chain bridging and security issues through it's using basically a lock-unlock bridge, if you're familiar with those, and then a relay architecture.
Does that include Bitcoin's chain?
No, not yet. that would also be an ambition, for sure. A lot of people ask me about that.
Given that you have a very narrow focus on the assets that you're including on the exchange, are you guys mainly focusing on institutions, trading very large volumes instead of retail trading a couple $100 here and there?
That's a great question. So yes and no. So when we kind of look at the marketplace, who's in DeFi today, there's a lot of what TradFi people call retail traders. And then there's some institutions, so like foundations, treasuries for VCs or whoever it might be. And then you have whales as well, right, who are moving capital for whatever reasons. And then of course you have businesses who are transacting more for business reasons rather than just for capital appreciation reasons. We made a strategic decision not to go into the long tail of tokens like meme coins and other kind of hotly traded things like that for two reasons. One, it's really hard to get reasonable liquidity and kind of price discovery in those, but also a lot of the people who trade those are not concerned about execution. If you're hoping to 50,000x your position in a couple days, you really don't care about trade execution. And we have found, as we've kind of started talking to a lot of people and shopped this around, it's institutions who kind of immediately understand the benefit because they think about this all the time, right? They don't just think about a protocol fee. They think about what is the total cost that I'm going to have to pay versus what I should have paid. So for them, it's kind of an easy thing to latch onto. That said, it is really good for individuals as well, especially once we add the asset management component. I think a lot of people underestimate the compound value of small costs over time. You have 1% worse results today. That little 1% could have grown so much over the course of 10, 20 years, and you're losing all of it, and you don't even know most of the time. So we would love to see individuals using it, and we would like to, of course, add more tokens over time. It's just for a strategic regulatory reason. We don't want to bite off more than we can chew at launch.
I think I'm going to hog up the last question, claim house rules. But so you mentioned we don't want to add, we want to only support these tokens. Who is we in a decentralized exchange? Who makes these decisions? And could they go against what you just said? And someone goes and lists, is Jared here? What's the latest shitcoin? Mother? Someone goes and lists Mother on there just because, well, that's what the nodes say. So who's we?
Okay, that's a really interesting question. And it ties into a little bit earlier, what is the definition of decentralized, right? We do not, at this time, endeavor to be totally hands-off on the exchange. What we do endeavor to be is transparent and non-custodial. Those, the way we think about it is you kind of have to pick your battles, right? You can try to be everything, but then you might not achieve whatever the original goal was, which was, to provide a safe trading environment for things that make sense. Or you have to just choose your battles. And what we thought were the most important things was, one, we believe that Krypton should exist. This is good for markets. Number two, we believe in transparency. And number three, we believe in non-custodial trading. What we've built, the mechanism itself, could exist in a centralized context just as easily. The New York Stock Exchange could stand up a tokenized asset exchange, use Krypton at its core, and that would function just fine. We happen to build it in DeFi, partly because you can build something for $7 million that would cost hundreds of millions to do in TradFi, and partly because we believe in it. We want people to be able to have control over their assets in a way that you can't in traditional markets. So we had to pick our battles, and we will exercise some control over what gets listed and how the exchange functions. So there's centralized elements for sure.
Cool. All right. I think we're going to transition over into our next presentation. Anna, thanks
Thank
so
you guys.
much.
Really
Super
appreciate
appreciate the time.
Oh, God. Was I supposed to do that? Thank you so much. Okay, I'm giving you this, and I'm taking this.
All right,
Oh, thank you so much.
there we go. Mic check 1, 2. All right. So I'm really excited about the next presentation, and especially the person giving it. Sam here is one of the senior engineers here at Edge, solving some of the toughest problems in our app, especially on the crypto side with Bitcoin and many of its similar coins. He is one of the few on our team that has experience with the next protocol that we're going to present, which I'm generally very excited about. I like to say that it's one of the few protocols that has breached the crypto sphere and gone out and been used by the used and been mentioned by the general populace, especially right now in election season. Although it'll go far past that, you know, being a general prediction market. So with that, Sam, take it away. Thanks a whole lot for this presentation.
Check, check. Test. All right, we're live. All right, sorry about that, guys. I've been having the worst luck when it comes to the equipment here. So batteries died on my last device. So yeah, my talk is going to be, well, first of all, awesome presentation, Anna, wherever you went. Great stuff there. Really excited to check out Krypton. And yeah, see what comes of it. So I have high hopes for that. Great material. My talk, similar in nature, is going to be about Polymarket. For those of you have heard of it, there's probably a lot of news about it, so you probably know the term or the name, but I'm going to hopefully dispel some of the questions you may have. So a little bit about me, as Paul did introduce me. Hello, who am I? I'm Samuel Holmes, as Paul mentioned, a senior software engineer at Edge, but not affiliated with Polymarket in any way, so full disclaimer here. This is no endorsement for Polymarket. It's just purely just, let me see. 1 second, something popped up on my screen here. There, sorry about that. Yeah, purely no endorsement, just purely my own interest in the story of Polymarket and its development. I like to start my talk off with just a quick quote from Bernard Baruch. I believe I'm pronouncing his name right. 20th century American financier and businessman. He once said, "Show me the chart and I'll tell you the news." This is a well-known quote amongst speculators, particularly technical analysts, TA traders, because it's something. It says something about how charts and market data can and how it can reveal some true nature to what happens in the world. It stands as a bit counterintuitive to some fundamental analysis that we might have, or preconceived notion about the markets themselves. And it's kind of inverse in that you read a chart and the chart will tell you what the news story is going to be, versus reading the news story and then you go and see what the chart reacts to that. It's a bit inverted. So I wanted to start that off just as kind of a primer to what we're going to be sharing today. Here's a bit of a complete overview of what I'll be discussing. We'll just start off with the origins of Polymarket a little bit, what it is, as well as how it works. We'll get into that a little bit. After we described Polymarket, I wanted to point out the role of UMA, or UMA, a optimistic oracle, which powers Polymarket. And then I'll give you a little bit of some my opinion as far as the value of prediction markets, mine and some others, right? So Polymarket was founded by Shane Copland in 2020. It's a bit of a COVID project, as he says. His motivation was to create an information market for social good. And an information market is a place where information is exchanged in general, and it can refer to a number of different types of markets. Currently, Polymarket doesn't collect any fees from its user, which I think is a testament or reflects the social good idea that he put out or he is doing in his company, right? In particular, Polymarket is a decentralized prediction market platform. A prediction market is a type of information market. Mainly focused on betting or on particular events, right? Or event outcomes, rather. From sports to cultural news, and more famously, political events, right? It's built on crypto technologies, particularly the Polygon blockchain for scalability and low fees. Though it's technically a crypto product, it aims at being familiar to those that use regular Web 2 apps, right? So it's accessible to anyone who kind of is, not necessarily crypto savvy, right? You can find it at polymarket.com, and I'm sure many of you have seen it. Who here has heard of Polymarket, by the way? All right, so yeah, we know now.
But you also have to not be using a US IP address as well.
Yeah, that is a good point. I don't think I touched on that point quite yet. So who knows what a prediction market is sort of already? I'm sure we kind of, Polymarket, but okay, cool. So we'll go a little bit into the details. Prediction markets is a place where participants bet on future event outcomes, but moreover, the prices within those markets reflect the probability of that outcome. So that's the information part of information markets. So you're extrapolating some information from the market, essentially, based on the market participants' activity. An earlier example of a prediction market would be Augur, launched in 2014. Though prediction markets have been around dating far back as the 1500s, I want to say, according to this reference here I put there, which is a exploration or analysis on prediction markets, on betting markets. So this has been a thing for a while. It's not just crypto specific, right? But how does Polymarket work? So I'm going to dive a little bit deep here. I'm going to try to keep it simple. Users buy and sell shares on a particular outcome. The outcome usually is a yes or a no or binary outcome. Yes shares are bets that the outcome will happen, and no shares are bets that it won't. Very simple. Share prices range between $0 and $1. Can't be 0, can't be 1, but in between. And the bets are made using the USDC token, the stablecoin. Prices indicate the market's belief in the likelihood of the event. The image on the left here shows an order book of bids. For anyone who is familiar with trading crypto, probably has seen something similar like to this before. Whoops, here, go down. Markets reflect this real-time discovery or real-time sentiment of collective sentiment of the market participants. The example on the left here is of a market of the recent HBO documentary that has claimed to reveal the identity of Satoshi Nakamoto, the creator of Bitcoin. We all probably know who he is, right? Or know of him. We don't know who he is. That's not what the market was about. But the volatility of the markets, as you can see here, there's a lot of volatility in the chart. Volatility often creates trading opportunities, which are oftentimes corrected by the market when acted upon. Keeping the market aligned with, I would say, somewhat of a gauge on reality, right, so to speak. Speculators can trade shares anytime, so that means they can buy or sell these shares, yes or no shares, even before the event of the resolution or the resolution event of the market. That is when it closes, the event happens. The result this results in a market price price pattern that you can often see is of what you can often see in crypto spot markets, for example, right? So you can see like trends and things like that. So it's not much different from real world spot markets. If yes shares trade at, say, 16 cents, this implies a 16% probability of that outcome. So it's very simple math to equate to. Price is created by an AMM. It's a technical term. I'll just brush over the technical. Automated market, that stands for automated market maker. Much like that's what Uniswap is basing its model off of, or other similar DEX. That's what they model off of. The yes and no shares are like the two asset pairs in an AMM. You can think of it like that. So as more people buy a particular share, it causes an imbalance, causing that price to change. Prices adjust as participants trade, and that's pretty much, yeah, that's it. Notice in this example, we see the market price shares for Lynn Sassamon being Satoshi Nakamoto, according to the HBO documentary, which trended downward over time, right? So as it closed, you kind of see people realizing that that's not the case, right? Although it was one of the highest outcomes earlier on. Let's see, rules define the end date and condition for the resolution. So it's a rules-based system. There's no like opinions on like, oh, I think they said this or they said that. It's very specifically defined. If the market outcome occurs, then all yes shares become $1, right? So if you bought a share for 16 cents and it happened that on a yes share for 16 cents and that outcome happened, then you earned a reward of the difference between $1 and 16 cents. And the no shares would conversely become $0. So you'd lose all your value. The example on the left here shows the winning outcome for the HBO documentary. And in this case, it was some other person not specified by the market. So it's interesting to me to see how the market tended towards 100% over time of a probability. You can kind of see the trend there prior to the event resolution, which kind of shows that the market is figuring something out before the event actually happens, which is very interesting from an informational and it really is telling to how these markets can be a source of information for the world. Final point I'd like to make is how they're very similar to traditional futures contracts, things like futures on Bitcoin or futures on commodities and things like that. A futures contract is an agreement to buy or sell an asset at a future date, whereas similarly, the markets on Polymarket are a way to bet on a future outcome without interacting with the outcome directly. Both of these enable speculation on some future value, and the price of shares converge towards the real underlying value of some outcome. Also, the example on the left shows you a bit of those rules, details. They're just text. They're basically saying, hey, this will resolve to yes if all these conditions are true. I'd like to give you a quick showcase. Unless you all are familiar with the product and have viewed it before, or if you aren't interested in kind of doing a walkthrough, then I can kind of continue on. A show of hands who would like to just walk through Polymarket. Cool, okay, perfect. All right, sweet. Let's see here. Give me 1 second to switch to mirroring mode. Okay, cool. So this is polymarket.com, the market section. You can see a whole bunch. Can you all of you see that with the lighting? Is that okay? Let me zoom in a little bit here. Okay, so let's go to the homepage. This is Polymarket. It's a simple web app that you can find at polymarket.com. As you can see, the most popular thing right now, of course, is the election, right? People are betting on that because big event in everyone's life. So, but there are plenty of other different types of markets. Let's go ahead and find one that's kind of interesting here. Let's see. Let's click to, say, sport. They have different markets from news to sports. So a lot of sports betting. Who's ever used a sports betting platform before? Can you show of hands? Okay, cool. A few of you. Cool. Padres was actually #1 for a while there on the NHL, I believe, or no, MLB. Sorry, getting my the World's. So yeah, World Series here. I'm going to go ahead and click. You can see what's trending right now. So we got Yankees, Dodgers, Mets. Yeah, I think Padres did resolve or didn't resolve. Last I checked, they did. Yeah. That is peculiar. I'm going to refresh that. That doesn't make any sense. I think the Padres not going to make it nowhere. That does not make sense. There we go. That's better. Yeah. As you can see, I left this tab open for a while. Yeah, so here are all the markets that are currently active, right, of the we're under the umbrella of World Series. So something you might be asking, how is it that I thought you said this was yes or no markets, right? That's something that kind of could be an initial source of confusion. When you see up here in Polymarket, they categorize a set of markets under a single term. So that's why you see multiple line graphs here. Each one is an individual yes or no market. So you can click into those individually. Let's say the #1 right now is Yankees. And you can see its graph right here as well. The order books, whoops, right here. As well as the price in which you can bet. On here, you can also, I think, see under resolution, you can click the view the details, and you can see a little bit more details about what if it will load. Blockchain's slow. Hang on. It will load the details as far as whether or not what the terms are for the resolution. So you can strictly see it. Hey, what are the conditions in which this market needs to what conditions are needed to be met in order for this market to resolve to yes or no. So here's all the details here. You can nerd out on that. So there's plenty of markets, not just sports and not just politics. There's even some fun ones like number of Elon tweets, right? People are betting on that, which is such a random thing to be thinking about betting on. One of the fun ones that I was looking at was like the highest grossing movie of 2024. That's a fun one because, did you see it? I'm not used to seeing the screen this zoomed in. So let's see. Yeah, there we go. That's a fun one. And yeah, Inside Out is just killing it. I thought there was going to be I was looking at way back here. I thought that was going to turn around. So this is obviously very interesting from a news perspective. You can kind of get a gauge on like what the world, what's happening on the world, and like forecasts, right? However, as who was it that mentioned in the back that about a VPN? I believe I think it was Jeremy in the back. So it is true that Polymarket doesn't support any U.S. Users on their platform when it comes to betting due to regulatory concerns. However, people do not necessarily live in the U.S., but they visit, so they use a VPN. And yes, question.
There is a legal one now that they just won a case against SEC Calci.
That's true. I do mention that in my slides, so yeah, good point. Yeah, that's a good. Yeah, that just came out. I think the 14th of September. So yeah, I think this is starting to kind of clear up when it comes to legal concerns. But I'll save face on that because that's not necessarily what my talk is about. And I'm kind of going to go into a little bit more detail on like deeper on how all this works so you kind of get an idea of like what is really going on here. So I'm going to switch back to my slides and just finish up. Because I wanted to touch on, let's see here, go back to my slides. The final thing I want to talk about was about UMA and the optimistic oracle. Let's see here. There we go. So Polymarket uses or utilizes UMA's optimistic oracle, or OO, for its event resolution. I'm going to kind of explain kind of how that works so you kind of get a clear idea of like how does this secure, right? Or how can we guarantee that people are going to come to the right conclusion on outcomes? UMA, standing for Universal Market Access, is a decentralized oracle service. You've probably heard that term thrown around. Hopefully I'll try to dispel it from you. It ensures that every outcome are determined transparently and fairly because it's on a blockchain, right? And it's open and everyone can participate. It's Web3 app, so it's not like a Web2 app. It's a little bit more technical. Is located at uma.xyz, so if you care to check it out, you can learn more information and go detail. Yeah, bless you. How does it work? So an optimistic oracle is a model of which oracles, for one who knows what an oracle is, or should I kind of go over that really quick? Okay. Seems like we have a few. So an oracle, so there's some people that didn't raise their hand. So an oracle itself is a way in which you could get outside data that's not on the blockchain onto the blockchain in a secure way, right? In a way that is trustworthy. And in this case, an optimistic oracle, outcomes are posted to the blockchain and are accepted to the blockchain as true unless they're disputed. So optimistic about the data being put on chain. Users assert statements as true along with a bond. I think currently the bond is $750. And this bond acts as a bounty for anyone who wishes to dispute that assertion, so long as they provide some evidence to the contrary. All outcomes that are posted are subject to a dispute time frame or a challenge time frame for which anyone can participate in disputing. Most statements, however, go undisputed. So it's pretty much just going along. Undisputed outcomes accepted once they're settled in the market has settled and the time period has surpassed. Disputed outcomes move into UMA's dispute resolution mechanism. That dispute resolution mechanism is called data verification mechanism, or DVM. It gets activated, of course, as I mentioned, only when disputes occur, so it's not always activated on an outcome. And UMA token holders vote on the correct outcome between the dispute. So the voting process is weighted by the token staked. So it's a staked network. So if you hold UMA but don't stake it, you won't be able to participate. But once staked voters, you can become a voter. Correct voters may earn rewards, so that incentivizes them to vote correctly. Incorrect proposers lose their bond. So if you disputed something and won, you win their bond, essentially. Likewise, if you disputed something and lost, you would lose your bond that you have to post in order to dispute. And that goes to the person who correctly originally made the statement. Economic stakes promote honesty and deter malicious actions. So that's an important point to make, is that this is all an economic model, right? It's not necessarily based on some technical security. The image on the left is recently pulled from UMA's website, and it shows the APR currently for voters to stake, vote, and earn their APR just by staking and participating in votes. So I just want to quickly showcase what that looks like if you guys are interested in checking that out. So I'm going to pull that up next so you can kind of see the under the hood of Polymarket, because not too many people go too deep, especially if you're just checking out what is being reported on CNN and whatnot. So let me go to that. Whoops. There we go. So this is UMA's website. And here is the oracle.uma.xyz. This is where you can see all the statements being posted and their bonds, right? So you can see people are posting a statement for A lot of Trump stuff. Of course, politics is one of the most hottest topics right now. I'm gonna refresh to see if that has changed. Nope, probably not. I'm gonna zoom in a little bit here, see if we can find something a little bit better. Okay. I saw McDonald's and got hopeful there. Okay. So you can see there's a time. Here's the challenge period right here on the right. So we have 1 minute here to dispute. If you say, hey, I don't think that that's happening. Under verify, we see all those statements being proposed. Here is where you can actually propose your own statement of fact to markets that haven't resolved yet. So of course, this is, I think, sorted by some algorithm that will, I don't know what the algorithm is on sorting, but let's look at one of these. Will Binance list degen? Of course, degen for all the degens out there. For this one, you can't actually, I don't think there's going to allow you, you could actually probably post your bond right now, but it wouldn't be smart because anyone can dispute that and take your money because it's not the end of 2024 yet. And I'm pretty sure the description here will say by a certain date, and it will outline that. So this is why it's important if you're going to be looking at a Polymarket to actually look at what the market is defining. Sometimes you might think, oh, we'll list degen. Oh, they didn't. That means they didn't list it, and this should be no. But it actually says 2024 up here, and more succinctly, this gives you the conditions in which that market should resolve. So this is really the detail. This is the nitty-gritty here. Great question. Finally, here under settled at the top, and I think, did my machine froze? What's going on here? I think my tab froze. Yep. You can see that is. So we'll move on. I'll close out of that. I'll just skip over the settled. What is interesting is under vote.uma.xyz, as you can see here. This is where you can actually participate in the staking and voting process. As you can see here, I got a MetaMask wallet. Zoom in a little bit, connected. And you can see the process is really simple on how it works. Zoom in a little bit more. Can I actually do this? Oh yeah, cool, cool. So how it works is, one, you have to stake some UMA. So I'm currently not staking any UMA, but I do have some tokens. And then the next step in the process is to vote. And I have voted on 0 things, therefore I have earned 0 things. And then after that, some time, you will have some rewards here to claim. Let's show you what the staking process looks like. It's pretty simple. You click on stake and you enter an amount. I'm going to try this for the first time ever, because I haven't done this yet. And cross my fingers that the demo gods like me. So here it's going to do the typical MetaMask confirmation type of thing. I'm going to hit approve, and then I'm going to just say YOLO, just approve all those things. So this is actually being, UMA is actually on Ethereum, not Polygon. So I probably paid like $30 to do that. I'm not sure. We'll go ahead and see. But it says that it did stake. So let's go ahead and open up my MetaMask here. OK, yeah, enhancements. I like it. So let's see. I have my transaction here. They changed some stuff on MetaMask. I kind of like Edge better, to be honest. Kind of biased. We got one Edge fan. All right, so where is my transaction list in here? It probably didn't show, or did it? Let me just go ahead and pull my address up, and I'll go to etherscan.com and check on that transaction. Oh, DX address. See what's going on here. So of course, did I do things? It looks like I did some things 53 seconds ago. Oh, you know what it is? It's not just one slide to complete. I have to do 2 things. So after approving the transaction that they can move my UMA tokens and approving the app to be able to do that, I have to then click stake and then approve the actual transaction. Yeah, $5, that's okay. It's not too bad. Not as bad as 30, right? So now it looks like it's submitting my transaction. Whoa, this is pretty interesting. I've never seen a UI like this before, but Transaction complete. Hey, not bad. Cool. Now I have one stake balance. Great, cool. Now that I have some stake in this UMA business, I can go ahead and vote on things. One thing I wanted to show when you click on voting history here, it will show your API earned rate, as well as it does mention here in this fine print that voting, I'll try to read this out for you. All voters receive a continuous emission reward simply by being staked, but voters' performance in each vote round is used in determining allocation amounts. So you still earn just by staking, but the more you vote, the more you can earn. So this is what incentivizes people to participate in this thing rather than it just come to a halt. Yes?
Do all markets get resolved and then they go into a challenge period which then people vote on, or does it have to get challenged before a voter can go and vote on it?
Okay, that's a great question.
Can you
so
repeat the question,
the
Sam?
question was, let me repeat, correct me if I'm wrong. Do all markets have to go into a challenge period before they can get voted on? Correct?
Or do they all automatically just get put into a challenge period?
Or do they all automatically get put into a challenge period? I'll just repeat the process to see if that answers the questions. All markets are open to being resolved by anyone at any time, right? Most markets will define the event time frame, so no one's going to resolve those until that condition is met. So once all the conditions are met for that market, or yes or no queries as it's called, anyone could place a bond and submit an assertion on yes or no and solve and resolve that market. And then it goes into a challenge period that anyone can challenge or dispute that.
My question is how do we know if the conditions have been met? So Trump says abortion 5 times in the debate, right?
Mm-hmm.
On the 5th time he says it, that's not on-chain data. So there has to be somebody that's voting hey, this did happen.
That's a good, let me clarify a little bit. So the question was, how do we know what the conditions even are? Because there's no on-chain data to even look up. So I probably wasn't as clear, I brushed over. Let's see if this tab reloads. Okay, cool. No, this is great. This is great questions. So here's an example of the HBO documentary identifying someone as Satoshi, right? There is no on-chain data about the HBO documentary. You have to go and watch it, right? So under the description here, it states what the HBO documentary is. It states what would consider to be a yes on this query, which would be that it's anyone except these people, right, that are defined here. It also says, it gives some information about, let's see, the date in which it was released. And I think it doesn't give you any link, but some markets will give you an actual link. They say, go to this link, read the data on this table, and if the data says this, then that means, then this means yes. If the data says something else, then it means no. And so it's up to anyone making a claim to do this work of figuring out what the conclusion of the market is and submit it. Now, things that are a little bit more ambiguous, like how many times did someone say something, those could be challenging because it could go into dispute. Maybe he didn't say something 3 times when they wanted 4, or when they actually wanted 3, and he only said it twice. And the 3rd time was actually another word. Those are sorts of things that the market has to do go to dispute on. And once it goes to dispute, the token holders then go to the voting process on this other screen here, and they look at what is currently being disputed, and then they can do a vote. So let me look at one of those here. We'll match between Spain and Serbia, and then a draw. So here's a bunch of discussion happening on a Discord as well, so people can kind of deliberate and provide some more evidence and whatnot, so it's an open discussion. But right here, let's see. Here on this, you can get all the details, of course, go to the discussion, learn about it, and then you can, doesn't actually show, oh yeah, you know what? These don't actually show votes yet because of people are currently voting. So you can actually choose your vote, what you think, yes or no. Unknown. Early, there's a few other conditions, which I'm not too familiar with those, so don't ask me too deep on those ones. But yeah, you can choose, and I'm just going to say yes, why not? Heck, see if that works. I don't know, I might lose all my one UMA, I don't know. I never actually done this before, but I guess you click commit here, and you commit your answers. Actually, I'm not going to do that because kind of actually, I don't know, I might play around with this a little bit more. But you can see that there's an app here and a process in which you can go through each one of these things, submit your votes. They'll show up here under your vote history, right, as what you've done. And it will give you some rundown of some earnings here. And hopefully this rewards will go up for you. So that's the incentive model. And I hope I answered your question as well. So that's all about I really wanted to show to you when it comes to UMA. So let's switch right back and just close up really here, and we'll go back to questions later as well. So let's see. Always takes a minute to switch. Nope. And there we go. All right. So finally, I just wanted to give a bit of a summary and kind of explain why does all this matter? What is the value of all this? Is it just all about betting and making money? There's partly speculation and there's partly the entertainment around that or the incentives around that. But really, I want to kind of mention that prediction markets are already impacting a lot of news forecasting today. And it's making its way into the public sphere or the public's perspective. It's gone mainstream, so to speak. You're probably hearing people talk about it a lot right now. You're even seeing people use it on TV, say, here's the probability of an outcome in a forecast, without really knowing that it's an underlying blockchain technology and all this stuff going on. So prediction markets transcend blockchains and blockchain adoption, I should say, because they have they remain as an effective way to get at truth information, even if the markets are small, right? So you can have a handful of people betting and $1,000 worth of volume, but of those people that are really interested in the outcome, they're working towards sourcing truth. So it's very interesting in that respect. That doesn't have to be a large thing to get value out of this sort of technology or this sort of prediction market. Some of the main challenges, however, remain mainly concerning regulatory gray area, as the gentleman in the back mentioned. For example, Polymarket, as I mentioned, doesn't allow betting in the U.S. Or by U.S. IP at least. I think that's their means in which they don't allow betting in the U.S. So it would be against their terms to actually terms of service to use it as a U.S. citizen, I believe. However, in more hopeful news, and as the gentleman in the back mentioned, U.S. District Court has given a green light on betting on election contracts. One of the more controversial and previously prohibited markets. Like you, as a citizen, you could bet on sports and things like that. It's not illegal to bet. It might be illegal to service bets as a business, but specifically betting on. And I'm not a lawyer by any means. Please contact your lawyer to get clarified. But as far as I know, betting on elections is illegal as a U.S. citizen until recent court rulings. And the platform that they allowed was Kelshi, as was mentioned. So yeah, New York Times, September 14th. I can give the link to that as well if anyone's interested. So in conclusion, prediction markets like Polymarket are insightful forecasts. They exemplify the power of collective intelligence that the world can bring. And as long as you're using a decentralized platform, you're getting the best of what human knowledge can bring. So markets reveal that truth due to the participating and having skin in the game. Money is a very important aspect to this, because if people just can make a claim, there's no skin in the game, then you don't really get a source of accurate information. And I think information markets such as Polymarket give us a powerful source of truth, and even for news forecasts and news and forecast events. So thanks for listening. To end the quote, show me the Polymarket and you'll tell me the news. So yeah, thanks so much. Any more questions? I'm sure I've answered plenty, but we'll leave it open. Yeah.
Okay, so if this is supposed to be an accurate or insightful predictor, I mean, not every person is equal to $1, so whoever has more money has more vote, right? Are all these odds skewed by who has the most money?
So,
with their opinion?
I'm sure there's lots of material to expand upon that sort of conjecture or argument, right? Not necessarily conjecture. And from what I know from my research is that information markets and prediction markets actually tend to be more accurate. And I think that's in part due to the fact that anyone trying to manipulate the market would quickly get pushed out of the market, much like if someone was trying to manipulate a typical spot market and pump the price up. That can really skew the market. Obviously, on smaller markets, you could probably see a lot more volatility. I've seen that where market shoots up and down really quickly. But because there is a future event that will settle that market, the closer you move to that event, the higher the risk is to try to manipulate that market. So therefore, that's why it tends to resolve as you get closer to that event or get closer to the conditions in which, it might not be a time-based event, but the conditions by which that resolves that event. So that's another factor. So it's not wise to try to manipulate the market by some means unless you think maybe Krypton can solve that problem a little bit and they can integrate some sort of prediction markets in the future. I don't know. No claim on Krypton. But there are some manipulations just like with any markets, and you can't get around that. But overall, they tend to give you accurate information over time is what has been shown.
Well, because if someone's trying to manipulate, then they just increase the incentive for
somewhat.
Even if a lot of people with a small amount of money to jump in and say, no way, is that 70%? Like I'll
exactly. Yeah, that's a great point. Like if you take a small market and that has a volume of $100,000 and you come in with $1 million and try to move the market, pretty quickly people are going to see an opportunity there to take your $1 million, and they're going to flood towards that, and the market will adjust because they're going to grab your money unless you get out faster. So, and you got to ask, what is the real incentive by doing that? Maybe you can make a claim on maybe some news platform for a very small period of time, but the more people participate, the more people are watching, the less likely that you're going to get away with something like that. So, great point. Yeah, thank you.
So if it's all based off the stable coin, and let's say there's a low probability of 20%, so if you're doing a stable coin, would you be heavily weighted and get 5 shares or 5 votes for the negative because you're going to use up that stable coin rather than waiting for change or having a balance in your account type of thing?
I'm not sure I quite understand the question. Could you give me an examol of what you mean?
Like if you're putting stable coins up for your votes, right?
Right.
Is that equivalent to essentially $1 in their terms?
Yes. So every share is going to be priced at either from anywhere from like a fraction of a penny to 99.99 cents, right? Something close to $1. And that is determined by how many people have bought yes shares versus no shares. The more people buy a yes share, that moves the price up on yes shares and the no shares down, right? And they always equate to $1. So if you have 40% no, or 40 cents for a no share, and 60 cents for a yes share, that's always going to add up to $1 minus some slippage, which I don't know technically what that is, but it was mentioned in the documentation. So when that market resolves, the 40 cents, if it was a yes, will go to the no, and you'll earn all that those dollars that were bought for those shares, and those shares on the no side will become 0.
Yes.
Yeah.
So
or
there
vice
has to be
versa.
an office. There has to be somebody on the other side of the trade.
Yes.
There can't ever be a point where, everyone's buying, no. Obviously, the price would go up. It would start to fluctuate. Right.
Yeah, there typically isn't, but I have seen when markets come pretty close to the resolution, it actually going down to very, very like a small, almost zero, nothing on one side, because they know someone is going to post the statement or assertion that's going to go one way before it happens. So the market kind of resolves itself before the event actually on chain is submitted. I've seen that happen before because the people are watching live in real time, and before you can the people acting on UMA and participating in that protocol can actually act. The market already resolved itself, so that's normal, and we've seen that. But that would be when people just sell all their no shares, or people go and ape into the other side, right? Quickly. So I've seen those sorts of things. But yeah, technically there's always a ebb and flow, a kind of uncertainty level, and that will always show up as a probability or a balance between the two.
And is it the first person that posts bond to respond positively to the assertion of what the claim is? Is that where it's settled? Is that the final, and everyone has to vote on that one? There's not another person that can post bond and say the equivalent statement like, yeah, this happened, because somebody already stated that.
So correct. The first person to post their bond and assert the statement of which way the market settled is the one in which settles the market. However, there is a time period after that post of the assertion that anyone can dispute, and then that would be someone posting a bond of the opposite and providing some extra evidence. And then it goes into the whole voting process. But rarely does that ever happen. People tend to be honest because then they know the structure, the incentive model, or the steps of the series of events after dispute is always going to tend to resolve to a correct statement.
What's the incentive to be the first to put the bond up, though, I guess is what I'm trying
That's
to
a
get at.
good question.
I would think that you're going to get the money from the people that dispute it, but that's only if you're like, say you're watching it, says he's going to say something 3 times, and you're like, he said it, and you post the bond,
Yeah.
so that you're hoping that someone argues and you get their bond money, right? Otherwise, what's the incentive?
I mean, you could be participating in the betting on Polymarkets for that event, right? And so you might want to get that settled sooner rather than just leave it because you have shares that will earn you reward, right? You might be the opposite and don't want that to be disputed, but how are you going to stop anyone else that is on the opposite side of you from disputing it? So it's just an open way for anyone can make these claims. If they're accurate, they're just going to be remained optimistic, as they say. It's going to be on chain. It's going to be accurate. But if it's not accurate and it's malicious, anyone can then go into dispute and say, hey, this guy's a bad actor trying to take my money. And then the token holders in the UMA protocol will act accordingly. So
You're also building a reputation as someone who said something accurate.
I don't believe that UMA is actually using a reputation-based system, similar to something like Augur, which I believe was based on a reputation-based or had a reputation-based system. Actually, it's been a while since I looked at Augur, so I don't know the details of that. But it's actually the other O in optimistic oracle, right? Which is that it's trying to say we're just going to believe the statements up front, and then if there is a challenge to that statement, then we'll go into a process of voting. And so it's a little bit more efficient in that there is no need for a reputation. Anyone can participate. So it's not based on identity. It's not based on some sort of thing like that. So, yeah.
How does Polymarket make their money?
Oh, microphone. Sorry. Thanks, Drew.
Do they charge a transaction fee? Because when you do a contract on the blockchain, I don't care which one you're working on, and it has something to do with you do this and I do that, and somewhere in between there's a transfer fee, or it might even be 3 cents a click or 9 cents a click, and you were saying that they did this out of the kindness of their heart, and I'm wondering, it's awesome.
So the question there, in case you went, I think the microphone, I don't know if it's off, it's a little low, but the question there is, how does Polymarket make its money if they're not charging transaction fees? Also, any interaction on chain, as we know, cost gas tokens and things like that, and there's fees involved. So how does that all work? Are they just doing this out of the kindness of their heart? I don't know the answer to that because I don't work for Polymarket. But from what I've researched from listening to the founder and what they're doing, is they're very much focused on being a product-based company, trying to build the product first, and not focus on revenue. And we've heard that before, so that's a little scary. It's a good question, good thing to be good cause of concern. But they're really trying to grow quickly and get users before they start charging and figuring out what the revenue model will be. But you could imagine in the future they start adding a small fee and taking a cut. But right now they're just running off a runway of investments from Vitalik Buterin and other VCs, notable VCs. I think Anderson. Go ahead.
I saw an ad for a movie, Inside Out 2 movie, on the website. So they got lots of views, right? You've got people on CNBC talking about Polymarket now. You're getting lots of views. People are going to want to pay for that space.
That's a good point. Advertisement revenue would be a good model because they are information. They're really focused on the information side of this, not so much the speculative G. So yeah, so the point there is that if they have ads on Polymarket on their website, that could be a source of revenue as they get publicity, which they are getting mainstream publicity on the information from their website. So yeah, that could. I don't know if they switched to that revenue model, but if you saw an ad on there, they could have. But yeah, so I don't know the details on which their business model is, but I know they're definitely doing the grow quickly, get investment type thing for right now, as far as I know.
All right, we might have time for one more question. If
Yeah.
anyone has one.
I think that might have wrapped it up. Well, thank you for your time, guys. Appreciate it. If you want to plug in. Cool.
Well, obviously, we appreciate everyone coming here and joining us again for a great meetup tonight. Obviously, want to thank our sponsors, Edge and Paul, of course, Coinstructive, Bit Refill, always making all these events possible. And if anyone would like $5 of crypto and download the Edge app tonight, please come see Paul afterwards. We always like to wrap up these events by offering anyone the opportunity. If you have an event or a project relative to the space that you'd like to come up and promote, please feel free to come up here by the stage. We'll give you about 60 to 90 seconds to quickly tell us what you're doing. Bueller. Bueller. I guess there's not a lot of events happening these days.
I guess I can throw them up. Nice.
All right.
Thank you for hosting us. This is awesome. Been to a couple of these. They're always great. Especially the one, the drink, the happy hour event. Lovely.
Free booze.
I started a Bitcoin happy hour in Pacific Beach, right at the Hideaway, a block away from Crystal Pier. We meet first Wednesday of every month. Everyone's welcome. It's Bitcoin focused, but we all have experiences from trading shitcoins as well. So bring those. That's going to help people push more people into understanding Bitcoin as the hardest money. But there is lots of opportunity everywhere in Web3. But we believe that Bitcoin is the real hardest money. It's replacing gold and will eventually replace gold. But everyone welcome. The Hideaway, Pacific Beach, first Wednesday of every month. So hope to see you there.
Anyone else have a project, event they'd like to come up and share with everyone before we wrap? All right, well, once again, thanks everyone for coming, and I think we're still going to stick around for 15, 20 minutes for networking if anyone wants to hang out.
QR code should work for anyone that was trying to sign up and join the organization team. Let me know if it doesn't. Hopefully it works now. And yeah, thanks a lot for everyone coming. We'll be here for a little bit longer, so thanks so much.
Drink to celebrate or drink to forget?
There you go.
Thank you.
appreciate you. I need to get you on a call with Michael. Do you have a calendar that I could just DM you for later on?
I used to, I don't anymore.
Okay.
So I'll shoot you a DM. We'll figure it out for sure. Yeah, we're good. So Michael, right?
Thank you. Thank you
Michael.
so much.
No, thank
Hopefully
you.
we can come back.
I was excited to learn about your exchange. I've actually dabbled in one of Solana's ones that was just really not Meteora.
Oh, cool. Yeah, Meteora is great.
And
I
then,
just love it.
yeah, and I love the team. But I just knew there was too much Meteora, and we were talking about it, and I eventually decided to focus on more existing strategy. I'm going to check you guys out.
Yeah. People like Geo
I'm working on a project that's not just quite stage ready yet, but I come from TradFi. Not exact stage ready. Yeah, not quite right. I just found my developer. Let me get a little bit of code written first. Yeah, no worries. Okay, cool. Really quick, I must have that thing. All right, there you go. Alright, you guys have
Yes, I just started hang out. I was like, yeah, thank you so much. I'll definitely come here more. Okay, yes, I love that. Yeah. Yes, I did. Yeah. I'll be coming more. Yeah. Yeah. Thank you so much. It was great meeting you.
Paul, I want to ask. You want to try this out and see what works? You like it? Right now. Just plug it in and then. Yeah. I have a phone. I just want. Wouldn't you like to know if it works or not? What's it?
I'm trying.
Okay.
Oh, no. Unfortunately, the way we have it, this needs to go first. So we don't have, we only have a female that was on the computer. So we don't have, it's buried in this entire setup. So yeah, we don't have a female. Instead we have this guy that plays the computer.
Oh, okay.
So and at least my computer doesn't have it.
So you do have USB-C to HDMI.
Yeah. That's what we would typically use is probably HDMI. Yeah. So, which does work on the phone. I've actually tried that on my phone. That's worked just fine.
Okay, yeah, it works. All right.
That I verified that actually.
Okay.
question for you. This is something I just did today. I can pull live prices off of Polymarket cap. Those are live prices inside of a Google Sheet. And there's a live,
figure out how to do it.
live prices from financeyahoo.com.
Was this what I was talking about earlier? You just pull it off the API?
Well, no, that's not how I'm doing it. Are you able to read that down there? It's indexed into using import HTML, pulling a table and specifying the table number and the location in that table. So I'm using import HTML and then indexing into the import HTML. So I'm going to the site. It has a table on it, right? So I just count down tables 1, 2, 3, 4, whatever. So it's table 1, and then inside that table,
It's the most fragile way of, you're basically doing like web scraping.
Yeah.
Which is kind of a fragile way of getting data versus an actual API. You're doing basically what I mentioned you could do, except you're doing it via web scraping instead of doing it via like a thing API.
Well, I would like to know the other way of doing it then.
Yeah, from the API.
But then it'll work in Google Sheets.
Google Sheets can make a fetch call and then process the JSON. There we go. That becomes much cleaner. One market cap can change your table flow at any point in time, and then it breaks your sheet.
So, like Yahoo Finance, Yahoo's going to be a little bit more reliable, perhaps.
I have no idea. I mean, they're all, who knows what, if it's crypto, go to Polymarket. Start with it.